Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this particular video, we are going to be discussing the McGinley Dynamic Indicator. Alright, I don't know if I pronounced that correctly, so I'm just gonna write it here. So this is the indicator we are going to be discussing in this video. All right, it's a custom indicator, so if you do not have this indicator, you will have to download it from an external source. After downloading it, you'll have to add it to your indicators library for your MetaTrader terminal. Okay, so this indicator uses a dynamic trend line that adapts to market conditions, providing more efficient trend signals than moving averages. So I'm just going to be adding the indicator to the chart right away. All right, so this is how the indicator looks like. All right, the indicator looks like a moving average, but unlike standard moving averages, which can be slow to respond to price changes, the McGinley Dynamic Indicator adjusts itself based on the speed of the market. All right, it adjusts itself based on the speed of the market, offering a smoother and more responsive trend line. All right. So by simply judging whether the price is above or below the dynamic trend line, traders can quickly identify the current market trend and make more informed decisions. So using this indicator is quite straightforward. All right. Very, very straightforward. When you have the price trading above the McGinley Dynamic Indicator, it shows that that is a bullish trend. On the other hand, when you have the price trading below the indicator, it shows that that is a bearish trend. How do you get signals? Basically, when the price crosses below the indicator, it is a sell signal. When the price crosses above the indicator, it is a buy signal. Okay, so whether you are a scalper or a day trader or a swing trader, you can be able to effectively use this indicator, and it works on all time frames. All right, when using this indicator, depending on your strategy, you can decide to trade in the direction of the trend. You can decide to trade a consolidation market, or you can decide to do counter trend trading. Whichever case, make sure you always observe good risk management. All right, irrespective of the strategy you are using, irrespective of your method of trading, make sure you always use good risk management because the signals are quite straightforward. Okay, when you have a bearish crossover and you want to sell, make sure you get a confirmation. Okay, you can get confirmations by using other indicators. For example, you can decide to use maybe the RSI or the stochastic oscillator or MACD or another indicator of your choice just to get confirmations. For example, in this case, we can see that we had the indicator give a sell signal around here, right? You can see we got a sell signal and the stochastic oscillator confirmed that sell. You can see by this bearish crossover, the stochastic oscillator confirmed the sell signal. All right, in this case, we had a buy signal and the stochastic oscillator also confirmed it. Okay, so it's important to have confirmation. In addition to using other indicators for confirmation, you can also use trend lines, use support and resistance zones. You know, all these are important levels and important tools on your chart. Also, pay close attention to chart patterns. For example, we can see that we had a double top here, and this is a bearish chart pattern. Pay attention to chart patterns. Pay attention to candlestick patterns. For example, we had a bearish engulfing here. And you know that bearish engulfing shows that a bearish reversal is imminent. All right. So when you pay attention to chart patterns, candlestick patterns, and also confirm signals with other indicators, you have a higher chance of recording success, right? In as much as all these do not guarantee profits, they do not guarantee that your trade is going to go as expected, but you can have a higher chance of success when you have confluence, when you have multiple confirmations compared to when you're relying on just one indicator. All right. And in terms of risk management, make sure that you always use an amount that you can afford to lose when you're trading, and make sure that you always make you good use of risk to reward ratio. For example, if you're risking $1, your profit target should be a minimum of $2. Okay, so try as much as possible to observe good risk to reward ratios, and then each trade should not exceed 2% of your capital in terms of risk, right? So do not risk more than 2% of your capital in just one trade. It is not a wise decision. Okay, it's not a wise decision. All right, so the the McGinley Dynamic Indicator is an indicator that you can use for trend following strategies or range bound strategies. All right, you can use this indicator in both cases, and it is very straightforward. So even complete beginners can make use of this indicator. Just a quick recap: when the price drops below the indicator, you have a sell signal. You can enter a sell, set your stop loss above the swing high, and you can target the nearest support for your take profit, or you can use other indicators to determine your exit, or you can decide to wait for the price to climb above the indicator to exit your sell. Then in the case of a buy, when you have the price cross above the indicator, you get a buy signal. You can set your stop loss below the swing low, the previous swing low, and then you can target resistance zones, right, for your take profit. You can decide to target resistance zones for your take profit, or you can wait for the price to drop below the indicator before you exit your buy trade. Okay, quite straightforward, quite easy. Or you can use other indicators to also confirm your exit. So it depends on the method you decide to use. All right, depends on you, the trader, and you can use this indicator on any time frame of your choice. So basically, that is it for this indicator. I hope you found this video insightful. If you haven't subscribed to the channel yet, kindly subscribe, and don't forget to like this video if you enjoyed it, and don't forget to share this video with other traders whom you think might also find this video insightful. In the meantime, thank you for watching, and I hope to see you in the next video. And don't forget to hit the notification bell so that you do not miss out on more trading videos like this. Stay tuned and happy trading.